Thanks for clicking! The London and St. Thomas Association of Realtors, Lstar, has released London's real estate data for the month of January, showing the worst real estate market for sales that London has seen since at least January of 2014. As we'll see today, London saw the highest number of new listings to hit the market in January for the past 10 years, along with the lowest number of sales for the past 11 years, like sales for all months for the past 11 years, not just for the month of January, meaning Londoners have a lot of buying power heading into the spring market.
Don't do this.
No, let's get this out of the way early. With so many listings coming to the market and so few sales, Londoners are heading into the spring market with a lot of buying power. Meaning, finance conditions, home inspections. If your realtor won't protect your financial interests, get a better realtor. Regardless, as for the reasons for the slowdown, I don't think it's going to come as a surprise to anyone outside of the real estate industry that the slowing market probably is at least partially due to problems coming from down south. So what I want to do today is go over London's real estate data for the month of January, discuss the extent to which economic uncertainty is having an impact on our market, and then go over the spring real estate outlook. As we'll see today, London's real estate market is definitely not heating up in the manner that many had expected, though the outlook for the spring remains uncertain. We will obviously continue to track London's real estate market on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this data. On to the data. First up, the benchmark price. The benchmark price, if you'll remember, that's the price of a home that represents the most popular set of features, and that price was up in January. December's benchmark was sitting at $609,900, and that jumped a little over $7,000 to $617,300 in January. So the benchmark price is up about $7,400 since last month, but up about $46,000 since this point in time last year. And the average price was up as well. London's average price in December was $607,000, and that jumped about $28,000 to $635,600 in January. So the average price up about $28,000 since last month, and up about $32,000 since this point in time last year. And finally, the median price, which was up and substantially as well. The median price, that's where half as many homes sell over that price and half as many sell under that price. The median price in December was $555,000, and that jumped up to $589,950 in December. So the median price up about $35,000 since last month, and up about $14,000 since this point in time last year. So the benchmark price up over $7,000, the average in the median price up over $30,000. That tells me that a lot more of the higher end stuff is selling, whereas maybe not so much of the lower end stuff. And we can kind of see this when we look at the sales to list price ratio, which isn't reflecting major price increases. The sales to list price ratio measures how much over or under asking a home sells. So if a home is listed for $100,000 and sells for $97,000, the SLPR would be 97. December's SLPR was sitting at 98.2, and that fell to 97.8 last month. So on average, homes are selling for more under asking than they had been in December.
To negotiate what?
This.
And finally, the months of inventory measurement, which is going to give us a better snapshot as to where the market currently stands. The months of inventory measurement, the MOI, measures if no more homes came to the market, how long would it take for London to completely run out of homes for sale. And the MOI in December was 4.9, now sitting at 5.1. That's the highest months of inventory measurement that London has seen since January of 2014. Meaning lots and lots of inventory and very few sales. So in summary, we have the benchmark price up about $7,400. We have the average price up about $28,500. The median price up almost $35,000. Homes are selling for even more under asking, and we have an increase in relative inventory that's available. But again, the real story here is the sales numbers, with sales coming in at 248, the lowest sales numbers for any month that London has seen for the past 12 years. And as I said, that's not the past 12 Januaries, that's the past 12 years in total. Back when people were still hoarding toilet paper, they still found more time to buy houses than they found last month.
It's just a matter of time.
And in addition to the dearth of sales, there was also a flood of new listings hitting the market, especially for January, coming in at 733, the highest number of new listings that London has seen for the month of January since 2015. So a flood of new listings with very few buyers means that the sales to new listing ratio is plummeting, coming in at 33.8. given that, according to the Bank of Canada, any SNLR below 40 is indicative of a buyer's market, the January data does appear to indicate that London's market is firmly in the hands of the homebuyers. So, judging from the data, the London market isn't showing any signs of a takeoff in the lead up to the spring market. Certainly not a rebound, and definitely no increase in demand brought on by interest rate cuts. And of course, at least a partial reason for this lack of demand is the uncertainty surrounding the potential for a trade war coming out of the United States. As it stands, people who are worried about job loss don't tend to buy houses.
And we've been offered very favorable interest rates.
As Diana Mock of the University of Guelph puts it, housing is such a big investment and tied to people's budget, so they are holding back. And just briefly on that, on the Free Press turning to the University of Guelph for its information, can we see more of that coming out of the media, the turn to academics for information on the real estate market, turning to those who have a relative less financial interest in the outcome of their predictions? Academics might not buy ads, but you'll be providing relevant, useful, and accurate information to your readers.
You'll ask me, what?
Regardless, that's going to be the argument, and to a certain extent, it's probably very true. That uncertainty coming from the United States is preventing Londoners from entering into the real estate market en masse. But let's just be clear, London's real estate market wasn't exactly booming pre-tariffs. October, November, and December's real estate data were all the third worst for sales in the past 11 years. So let's not act like, don't let the real estate industry tell you, that everything was going to be great, we were on the cusp of a boom, all of the data was pointing in that direction, and then these tariffs came along and ruined everything. No, what happened, once again, was that reality got in the way of the curated fiction peddled by the real estate industry, propagated by their puppets in the media.
And I would have gotten away with it too if it weren't for you meddling Republicans.
Well, you could still get away with it. The government could, as the chair of Lstar puts it, just make the tariffs go away.
Stop it. Okay. Okay? Okay.
No, but seriously, nobody knows how the real estate market would have played out had we not have had this threat coming from the United States. Between the mortgage renewal wave, rate cuts, a worsening economy, etc., who knows what would have happened. And beyond that, counterfactual reasoning is, by its very nature, pointless. And equally uncertain is how this tariff threat will play out, and further, how our economy will fare just off those threats coming in the first place. There could very well be some major economic damage brought on just from the turbulence of the threats themselves, just from the uncertainty brought on by those threats, regardless of whether or not they materialize. Or this all could fizzle out and we'll forget that this ever happened in a couple of months from now. The president could find himself a new target, which is not out of the realm of possibility. And at that point, we're back to our original position. Is the economy strong enough when interest rates aren't zero to sustain another house price boom? So, as to whether or not London's spring market will take off at this point, we have so much inventory sitting on the market, I can't see a major price boom over the next few months. Certainly not this month. Certainly not enough to induce an uncertain homebuyer into making the biggest purchase of their lives. Certainly not enough to have a fear of missing out. If you're uncertain at all about entering the market, we have a lot of inventory available. I don't think it's all going to sell off within 1 month's time.
Could too.
So it's not going to hurt you to take 1 month to step back and see which way the wind is blowing. With that said, if you are financially secure, you are certain it's the right time, there's lots of inventory available, consider buying. If not, don't. It's as simple as that. Don't try to time the market. Absolutely zero people can with 100% accuracy. With that said, we will continue to track how this all unfolds and how it plays out in London's real estate market on this channel. Make sure you click like and subscribe if you want to get those updates. But for now, thanks so much for watching.